When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon and welcome to GrainTV. It's September 27th, 2013. To my left is Logan Burgess and I'm Brock Schimbrell. We had a mixed trade to end the week in Chicago. Let's turn with a fire tip to see how we ended. Corn was down 2 3/4 cents, soybeans up 3 cents, wheat in Chicago, the leader to the upside, up 4 3/4, and Kansas City was up 4 1/2 as well.
Yeah, you know, Brock, that Chicago wheat contract did continue to show strength into the close today. Take a look here at a daily chart of that December contract, and you can see here we've traded higher for 9 out of the last 10 trade sessions, and we've made it over some key technical hurdles here. Take a look here. The red line shown is the 100-day moving average, and that's one area where we thought would offer some resistance, but we actually closed slightly above it here today. And closing above 680 on this contract is important as well. That's some highs that we printed back in late July. And in today's trade action, initially the trade moved up to 680. We found a lot of selling pressure, but the buyers came in to once again push it above that. So that's an area that should act as support here in the coming days. But certainly one thing that's really going to drive this wheat trade as we move into winter is going to be the wheat production numbers that we get on Monday. No major expectations or no major changes expected out of that report from what the USDA recently reported. But one thing that's really going to drive the corn and soybean market on that day is the quarterly grain stock report.
You know, like you said, Logan, we do get a couple of big reports on Monday.
Yeah.
If we take a look at this table here, let's just review what we're going to be looking at for Monday's report. If you take a look at that first column, that's the average of the analyst guess polled by Reuters earlier in the week. The next column I'd like to point out is the USDA, what they had last September at this time. So corn is really looking for a pretty big reduction compared to where we were last year at this time, over 300 million bushels lower than we were in 2012. Soybeans, a similar story, not nearly to that magnitude, but we're still looking for about a 45 million bushel reduction compared to where we were last year at this time. You know, I think if I was going to point out an area that, you know, has some potential to have some fireworks on Monday's report, I think it's going to be that soybean market. You know, on corn, if we come in quite a bit below the average of the analyst guess, we know that we're having a pretty good production year this year for corn, so we're going to be able to replenish those stocks rather easily here in the next couple of weeks. Soybeans, production is just a little bit more of a question mark, a little bit more of a wild card. So I think that if we do come below that 124 million bushels that the average of the analyst guess is looking for, I think we really could see quite a pop to the upside. Yeah, certainly. Well, that report's going to come out on Monday, as Brock said, at 11 a.m. Central Time. We'll keep you posted on what that report shows live on Twitter. You can follow us over there at GrainTV. You know, Brock, it is Friday, so we normally break down here changes that we saw in the cash market, and in general, we saw widespread weakness once again for spot corn and soybeans. Take a look here at a spot soybean map just from the last week. You can see we had exceptional weakness in Iowa. On average, most facilities were down about 50 cents, and this is really not that big a surprise at this time of the year as we have old crop stocks trying to, we have this large convergence between old crop bids and new crop bids. One thing to point out, though, looking at this map, is that we did have pretty darn good relative strength out of export markets, down on average just 10 cents here. So that's one thing to keep in mind for people looking to market soybeans right now. There's a lot of opportunity at those river markets as exports have remained pretty strong for soybeans. And we talked about it on last week's show. We still see pretty good storage opportunities out till January for the soybean crop. So those are two things to keep in the back of your mind. Looking at corn, relatively similar situation. For corn, we were down on average 10 cents over the week. Ethanol was leading things lower, down 20 cents on average there. But a similar situation with the river. The river showed some relative strength this week. You can see here at the southern Mississippi River, we were really unchanged for the week. So similar situation with corn. If you have access to river markets, they may be providing a premium bid right now. So keep an eye on that. If you need help finding those markets, feel free to give us a call here at the office. Our number is 877-472-4607. In general, that's kind of what we saw here for a Friday in the grain market. Thanks a lot for joining us on GrainTV. We'll see you back on here on Monday for the big quarterly grain stock and wheat production report.